Hello everyone, Clifford Bennett, Chief Economist, ACY Securities. It could be a slightly quiet start to the week, so we'll just start by talking about last week a little bit. Of course, it was a good week for equities last week, but Friday wasn't exactly the same story as US equities began to roll over towards the New York close quite a bit, but not all that significantly, but still enough to be a slight warning pointer for this week. However, with markets quiet this Monday, we may see slightly listless trading. Overall, though, I do think there is still significant problems ahead for the US economy. In fact, I guess if I wanted to be an extremist and search for headlines, I might be talking about the risk of triple recessions over the next 9 months across the United States, the European Union, and the United Kingdom. All three economic regions are really suffering significant slowdowns yet again. Germany is already in recession, and several European countries have negative economic growth, and overall the EU, it looks to be struggling. At the same time, of course, the German stock market is at record highs, as I pointed out last week. Who would have predicted that? You know, one of the world's major economies in a full-fledged recession, so the stock market hits record highs, makes perfect sense. And the euro's been strong as well on the back of the ECB continuing to raise interest rates. I fully expect there is a chance the Federal Reserve will raise rates at its next meeting now, and if not, most certainly at the meeting after that, on the proviso that inflation stays as firm as it currently is and there isn't a worsening of the banking crisis. In terms of data on Friday, we saw US consumer confidence come out, and the headlines are, oh, it's the highest number in 4 months, but it's middle of the range of the last 6 months. Let's, pick the time zone that suits. And then you stand back from that consumer confidence data, and guess what? It's still worse than it was during the lockdowns, the COVID lockdowns. Consumer sentiment is that bad. And it's at GFC levels, which are akin to the levels of the 1980s recession in the United States. So this is terrible consumer confidence data, as I've been pointing out for at least 18 months now, and that it would be an indicator as to the future path of the US economy, and it has most certainly been that. So again, still a negative pointer. Be careful of the headlines. Be careful of paying too much attention to one data print, such as many in Australia seem to be doing with the last employment data print for Australia. It was terrible the month before, good the most recent month, so really employment's flatlining to, I do believe, unemployment is probably on an overall upward trajectory in Australia. So just emphasizing the point, no one piece of data really matters, but I thought with that US consumer confidence data print on Friday, the headline that it was the highest in the 4 months, it seemed almost like a line a comedian would use for a stand-up comic show. Consumer confidence is terrible. Business confidence is terrible. Manufacturing is in recession. Building industry is in recession. Retail sales are really flat. Again, a case of, just looking at the last data point, it looks a little bit better than what it actually is. So my forecast for, I won't go into the UK in any detail. We all know that's a bit of a schmozzle at the moment, but Europe, US could really be in recession. And it doesn't even matter if we're talking about, are they technical recessions or not? Will they happen or not? The fact is that economic growth in the US is about as lackluster as it's ever been, and the same in the EU, though the EU might be doing a little bit better than the US, but that's difficult to say when the major economy, Germany, is in recession. So just a checkerboard of concern. We've of course got Blinken's visit, Secretary of State Blinken's visit to China this week. He's been there for a few days now, and there's been apparently 7 hours of discussions, which is apparently something we should all be excited about, according to the US. And he's meeting with the Foreign Minister of China, and both sides need to move forward. So it's likely we'll get progress. But we're not going to get major game-changing progress as long as the United States approaches the situation as if they have a right to still be ruling the world, which we all know, of course, they don't. And I've been speaking about this for over a decade now, how the rest of the world was catching up to the United States, and it was a case of the United States like that lead bicycle rider falling back into the pack as the pack caught up. So, there's all this talk about unipolar and multipolar. Of course, it's a multipolar world now. And I gave a speech, as I've mentioned before on this series, in Miami to 600 of America's largest companies' chief financial officers. And in that I said that they would need to understand that they will have to have delegatory management structures to component businesses around the world if they want to stay ahead of their competitors, because it will really be about paying attention to what's going on in each economic region, the three major economic regions of the world, and now Africa beginning to come on stronger as well, and individual nations. And I think in the relationships between the two biggest economies in the world, and in terms of superpowers, the United States is still very powerful, but don't forget that China already has the world's biggest navy, and China already has the world's biggest army. And of course, those supersonic missiles that China and Russia have, and over the weekend Iran announced it has its own supersonic missiles. The United States, at last I heard, had tested its first supersonic missile a few weeks ago, and the test failed. So at the moment, military technology does favor China, Russia, to a degree that is worrying to the rest of the world, of course, as it is when any countries have a military technological advantage. And the other worrying thing about all of this, and something that could come to play on and to bear on equities generally, particularly in the West, is that, this talk of sending F-16s. I'm not trying to be political here. I'm trying to highlight where there is a risk potential to equity markets still from the Ukraine conflict. And in a nutshell, it's this. President Biden himself said, to provide fighter jets to Ukraine would be absolute lunacy and lead to World War III. So what are they doing now? They're providing fighter jets to Ukraine. Russia has come out in the last few days and made it very clear that it will shoot down any F-16s that come into Ukraine in the same way it is currently recently destroying Leopard tanks and I believe an Abrams as well. So that doesn't mean they're winning the war, but these weapon systems from the West are not invincible. Whereas the supersonic missiles have reportedly been shot down. There was a report over the weekend from Ukraine. They'd shot down 6 of those missiles trying to hit Kiev while the African delegation was there. But the African delegation says, no, nothing happened. Russia says we didn't launch any missiles while the African delegation was there. And the Russian delegation says, no one said anything to us about an attack. We weren't ushered into safety. We didn't hear any explosions. There were no air raid sirens or anything of the sort. So the propaganda war rages. But the point about the F-16s is that Russia has made it very clear over the last couple of days that, yes, it will, of course, it has superior aircraft to the F-16. So the F-16 is not going to pose a threat in terms of air power. Of course, they would be very capable against land-based counter-military operations. But the key thing I want to mention, I'm hesitating because I don't want to be an alarmist. And I don't think this will happen because hopefully clearer heads will prevail. So how's that going so far on both sides? But anyway, if F-16s are used in the Ukraine conflict, Russian conflict, and they take off from air bases outside of Ukraine, Russia will consider those air bases legitimate targets. So, for instance, the Ramstedt Air Base in Germany, US NATO Air Base in Germany, if F-16s with Ukrainian pilots took off from there and went and conducted operations against Russia, Gramstedt Air Base in Germany is now a legitimate target according to the Russians, and it's hard to argue against that actually from a pure military perspective. So whilst we all want to compartmentalize the conflict in Ukraine as not being a risk at all to financial markets at the moment, it may well be. So I hope none of that happens. But you need to be aware, because it's not getting a lot of press, that Russia's made that very clear over the last couple of days in official statements. So anyway, as we move forward away from that, Blinken's visit to China, I think both sides have improvements to be made in their relations, and hopefully that will be the case. But they are getting very close to being the two equal, well, I always said there would be three equal superpowers in the world, and I've been saying that for well over 1.5 decades, and that was going to be the US, the EU, and China. And I think that's the case. When I gave that speech in Russia, in Vladivostok, where I rubbed shoulders with Hillary Clinton and other people, I was in Putin's final address. He made a joke about that currency guy, referring to myself, saying there would be three equal reserve currencies because there's going to be three equal superpowers. He said, but I got it wrong because there was going to be 4 reserve currencies, including the ruble. So at the moment, given the conflict that's taking place, obviously Russia remains a significant superpower as well. We can only hope for the people of Ukraine that this whole thing is resolved peacefully as soon as possible. Wouldn't it be nice if the African delegation of the past week has helped to sway in some way both sides to come to some kind of at least ceasefire situation? But that seems a very optimistic thought at the moment. Am I spending too much time on the war? Yes, I am, because hardly anyone else is at the moment in terms from an economic or financial market perspective. Any expansion of the conflict will immediately send Europe into deep, dark depression. A lot of Europe's oil at the moment is Russian oil, but it's coming via Turkey. So Russia exports the oil to Turkey, then the EU buys the oil from Turkey and says it's not buying oil from Russia. So there's still an energy risk to Europe from this conflict. And I think someone needs to mention it. And someone needs to mention that there's still risk, unfortunately, of the conflict expanding. Though, touch wood, and with God's blessing, that does not happen. But it's already a terrible situation for Ukraine, of course. All right, so moving on from that, we have in Australia a bit of a discussion about the Reserve Bank governor being able to stay on. And this is being put forward, I heard from one particular broadcaster who enjoys independence as well, saying that that would be a move against independence if the governor was replaced because he'd simply become unpopular by raising interest rates. Well, of course, that's not why the governor of the RBA should be replaced. It's because of a long period of getting it wrong, like underperformance. The OECD published the startling recommendation that the RBA board be replaced and the charter reviewed as a matter of urgency due to the performance of the RBA well before the interest rate cycle even started. So I was highlighting the underperformance of the RBA for keeping interest rates too low for too long, which is why Australia has a roller coaster economy at the moment. So I really would think if any of you out there have any influence at all in the government or are members of the government, please do think about looking after the Australian people first and getting all of the recommendations of the recent review thoroughly implemented as a matter of haste. I'll leave it with that. The outlook this week, I think I've been bullish oil, but I'm a little bit sanguine on oil at the moment, given that I see the risk of further Western economic slowing as being quite high. But I do like gold still, and it's at reasonable levels now. And I think a lot of the short-term speculative longs have been squeezed out, and gold could stabilize around current levels and move higher. I am still a risk-off advocate when it comes to the equity market in the US and Australia. And I do think the US dollar will continue to weaken, although at the start of this week you could see a brief rally, but overall the US dollar should be on a declining path, and even Treasury Secretary Janet Yellen said as much last week. Thanks very much. Clifford Bennett, Chief Economist, ACY Securities.